Let's talk now about the IFTA Quarterly return. We now know what we need to report the tax. We need distance and fuel information, and we know how to make the calculations in order to get the return filed. The IFTA Quarterly return, as the name would suggest, is filed 4 times per year in the month following the end of the quarter. So let's look at how our IFTA year would break down. So let's start, because IFTA is on a calendar year. Quarter 1 in January. In month 1, we create monthly summary reports. Again in February and March. Now in April, we create our quarterly summary reports for Q1, quarter 1, January, February, March. And then we file the IFTA return. And it works that way throughout the whole year. Quarter 2, quarter 3, quarter 4. And quarter 4 is filed in January of the next year, the year following the end of the calendar year. Each jurisdiction will have their own format for an IFTA return, but the information filed is the same regardless of the jurisdiction. So what we want to do is we want to review the IFTA operating principle again. Fuel tax owed is calculated based on where you consume fuel. Tax credit is determined by where you purchased fuel. IFTA nets the difference between fuel consumed and fuel purchased for each jurisdiction. Here's your good to know. File a return on or before the due date. If you owe tax, payment must be made on or before the due date. And if the last day of the filing month is on a Saturday or Sunday, the return is due on the next business day. This is an important one that often gets missed. A nil return is required even if there was no travel during that quarter. In the next lesson, we're going to talk about the IFTA clearinghouse, and this is how the tax dollars get distributed.